Hi to everyone. My name is Amanda Weaver. I'm with the Phoenix, Arizona office of Snell and Wilmer, and I concentrate my practice in commercial litigation, appeals, as well as, of course, I really like working on equine law and its specific concerns. I also have 4 rescue dogs and a retired racehorse. So I'm delighted to be with you all today to discuss the topic for this lunch and learn. Let me go ahead and figure out how to share my screen here. Right. Let's see. Are we seeing? No, we are not. I'm sorry.
That was working for me.
Was it just the home screen of it showed the Insuring understanding?
Yes.
Oh,
Yeah.
perfect. Okay.
I saw it too.
All right, great. Promise I'm a digital native. All right. Like I said, I'm delighted to be with you all today to discuss this topic. I'd also like to thank Margaret Parker, who may not be on the call, but is one of our co-chairs for the Equine Law Subcommittee, for her assistance in this presentation for this lunch and learn session today, which is on the equine industry and insurance. So what I'd like to do today is provide for the benefit of our animal law committee members who are not necessarily within the equine industry, to provide an overview of the equine industry, then go over some insurance considerations as they touch on different aspects of what we'd consider part of the equine industry, including types of coverage, first party coverage, as well as third party, have some illustrative case law discussion, and then some takeaways to consider, as well as, of course, addressing any questions that anyone has. So I'd say, first of all, the equine industry, to use kind of a catch-all term, is very wide and varied. It's a fascinating world because it does have so many different facets to it. So my goal in the next couple of slides is to provide a basis for the many types of needs seen in this industry, to help prime us for a more specific discussion of the types of insurance policies we might see, as well as the case law I mentioned on the previous slide. So the first thing that comes to mind, at least my mind, when thinking about the equine industry is horse owners as one of the most specific touch points. And even within that larger subcategory, you have a wide variety of different types and classifications of horse owners. You may have a first-time horse owner who just has a single horse, spanning the gamut, to someone who may have horses over the course of their lifetime, may have many horses. And so there's obviously a wide range of pre-existing knowledge, acquired knowledge, as well as experience that one might have, as well as different goals in their horse ownership, which also relates then to the purpose that someone might have a horse, whether that's for recreation, specifically for competition, or more in a business pursuit, such as a breeder or looking at owning racehorses, something like that. And of course, there's a wide variety of overlap with all of those as well, looking at a horse owner who might generally ride for pleasure, but maybe shows up to a competition once or twice or 5 times a year, etc. A horse owner may also board their horse at a commercial boarding facility, where a bunch of private owners keep their horses, or may keep their horse at home. I've also been assuming, for purposes of this slide so far, that a horse owner would also be a rider, but that's not necessarily the case. They may be a rider of their horse, or they may just own but not ride, relating to if they have their horse for competition purposes or for business purposes, etc. And a horse owner may also either fully own their horse, or if you're talking about higher value horses at a higher level of competition or racing, etc., a horse may be owned by a syndicate, or a group of owners who each own a portion or a share of a horse. So I think the takeaway to consider here from this slide is that from horse owners who may have a horse as closer to a companion animal to those who may own for business purposes. The needs of even a singular category like horse owner are incredibly different and complex. The next category that to consider, particularly with reference to insurance, is looking at industry professionals. So here would be riders who may not own their own horse, or who may, but who ride as part of their business. There may be trainers, either trainers / coaches for riders or for horses or for both. And those trainers may be may have a home base that they stay at and train out of that others travel to, or they may travel to others. For example, if a horse owner keeps their horses at home but doesn't want to trailer off property, they might have a trainer come to them to give them lessons and that sort of thing. Or the trainer might travel to competition. You also have barn and facility owners, but even that could include a 24/7 boarding facility, or a facility that's only open for competitions and events. And those facilities, both types, likely have some level of staff or employees who work there. You may have breeders, those devoted to animal care, such as veterinarians, farriers, grooms, body workers for types of alternative therapies like chiropractic, massage, etc. Recreation activities such as trail rides, kids camps, pony clubs, that sort of thing. And then equine assisted therapies such as therapeutic horseback riding, equine assisted and facilitated psychotherapy, ground-based therapies, occupational therapies, etc. So after going over these various types of industry professionals, I wanted to just provide a couple of hypothetical situations that one could expect within the horse industry. Seeing, for example, a large facility on multiple acres, you have one set of staff caring for the horses, like feeding and cleaning the stalls, but multiple trainers work out of the property, each with access to their designated areas on the property. Owners board their horses and entrust care to the staff and to their respective trainer. You might have a private barn. So for example, a couple of stalls on someone's private property where the owner or the resident may have a couple of horses, but may allow one or two outside boarders. And then, like I mentioned a moment ago, you may have an event facility where no horses actually live on the property 24/7, but there are stalls available for short-term use, such as when an organization comes in or the owners of the facility itself run the competition. And so I won't be going over each of these individual situations with reference to insurance, but I did want to provide a good background context for the various types of relationships and settings that do exist within the equine industry. I'm doubtlessly neglecting some, so please forgive me or feel free to raise it in the chat or during our discussion portion. However, these all generally slot into either first-party policies or third-party policies, which we'll get to in a few slides. So thinking in terms of these different types of issue spotting with the various roles in the equine industry, what could potentially go wrong with horses that one might need to consider insurance to help ideally cover some level of risk. And, as one with horses might think sometimes what can't go wrong with horses, but consider, for example, injury, disease, or accident to a horse, which would be expected either short-term or long-term, which may be something that they're able to heal from or not. For example, a huge concern with a variety of horse owners is colic, which is some type of abdominal pain in horses, usually caused by issues in the gastrointestinal tract. And the GI tract is fairly delicate in horses and can lead to the necessity of surgery, depending on the type of colic, which with a large animal like a horse, that level of surgery can be very difficult and likely not surprisingly very expensive. Similarly, you can have issues depending on the propensity of a particular breed or the horse's specific conformation with the navicular bone. which is one of the bones within the hoof capsule, and for which changes to it can lead to loss of moving comfortably for the horse, which can also lead to loss of desired use by an owner. Looking at injuries or accidents to people because of acts of horses either reacting to something a person has done or something in their environment. So for example, if an owner keeps his or her horse at a boarding facility, what happens if the horse injures a third party, either while the horse is under the control of the owner or under the control of a staff member? Similarly, as a trainer or barn owner, what happens if damage occurs to a piece of equipment like a trailer, and in the unfortunate circumstance, if there are horses inside it, and whether it's on property or off property, etc. Also, considering the value of a horse, going both directions as to what a horse is quote unquote worth. As a horse lover, I'd of course want to say priceless, but as a business concern, particularly as related to insurance, for example, is a horse bought after sitting in a backyard for 3 years with then 5 years of training and riding invested into it worth what it was paid for 5 years ago? Or is it worth more now? How do you substantiate that? What if a horse has health challenges that require significant time off in pasture and is now rusty and can't be used for the purpose for which he or she was originally purchased? So as that, with those many issues in mind, here are some additional questions to consider when contemplating equine insurance before getting into some specific types of insurance. So for example, what are the risks to insure against? How does one select an appropriate agent? What to do when applying for and considering possible policies, and what can be done if a claim is denied? First party policies, a very common one is mortality, which is generally offered on a broad basis for accident, sickness, disease, and theft. It's not like life insurance. It's designed to replace a calculable value of a horse. It's subject to an annual renewal that's also subject to specific conditions that would be laid out in the policy. Generally requires notice of accident or injury, and it's common to see something like immediate notice of accident or injury required. And indeed, as case law and other parts of policies would suggest, immediate very likely means immediate. For example, insurance policies may have a 24-hour phone number for reporting. And there's generally no express provision that an injury need be a certain degree of severity before notice is required, which can cause challenges for a horse owner on the ground or at the moment. For example, is a scratch on their nose that you treat with salve just one day, but not even mentioned to a veterinarian or reportable event. Similarly, an unreported runny nose, what if that develops into pneumonia 2 weeks later? And at least from a contractual and insurance perspective, immediate notice is important because the insurance company has a contractual right to protect its interest, to make sure the horse is receiving proper care, or to assume care of the horse to ensure that proper care, including also employing its own veterinarian for a second opinion, determining the cause of injury or illness, and whether there's coverage. And part of the potential challenge of requiring immediate notice of accident or injury, looking at something like a commercial boarding operation, is that there may not be some type of safe harbor for if the owner is not in the horse's care, which means that it's important to keep in mind, including notification in the boarding agreements or leases if you're leasing a horse out, or putting signage on the horse's stall. In terms of determining value and determination of loss under a mortality insurance policy, you may see either fair market value or an agreed upon value endorsement, and the value at the time of loss is generally what's looked at. Likely unsurprisingly, misrepresentation or fraud in the obtaining the insurance voids the coverage. and insuring for greater value than purchase price would require record substantiation. So for example, looking at the performance records of a competition horse, looking at training expenses to help substantiate that one has put effort and time into training a horse, any winnings that the horse has collected. And additionally, veterinarian certificates may be required for horses valued over a certain amount, for example, over $50,000 or $100,000, or for horses not owned more than 30 days. Other things we might see are changes affecting value during the course of the policy. For example, for a racehorse, if a horse is entered in a claiming race for less than the insured amount, that may have an effect. And claiming races are races where the horses are for sale actually prior to the race at a specified claiming price. And a horse may be claimed or purchased for that price before the race, and title to the horse usually transfers just before or at the start of the race. And for an auction, but where the horse is not sold, a horse entered into an auction but then not sold is subject to a reduction in the limit of liability based upon the highest amount bid, at which point generally one would see a pro rata return of the premium for the amount in excess of what that limit of liability was. Another type of first party policy, specifically with coverage for the horse, would be major medical / surgical. And it's generally would see it as an endorsement to a mortality policy for limited veterinarian surgical expenses. That is, it's generally not a standalone policy. So it's also not like human health insurance. There's numerous limitations on benefits and wide variations between policies. And so as with any contract and any insurance policy, it would be important to read the specifics and to make sure that the particular concerns that one might have or the risks that one wants to insure against would be covered. A side note of something that I've seen spring up within the industry is this concept of what's called colic reimbursement programs. And again, colic is something that is pervasive with horses and certainly always a concern. What this does is that some providers of nutritional supplements for horses may offer that it doesn't necessarily, may not have an upper age limit as to when an applicable horse could be covered for reimbursement for this. It may also be able to be utilized alongside equine insurance or instead of an equine insurance claim if someone has equine insurance. And the requirements for this sort of program usually include a veterinary directed wellness program. For example, 1 or 2 visits from the veterinarian and evaluation of the horse's health a couple times a year. May have a dental exam included, make sure they're up to date on their vaccinations and that sort of thing, feeding, and then feeding of the applicable supplements. And I've generally seen between $8,000 and $12,000 as the range for reimbursement of surgery costs here. I'm sorry, I'm seeing a note to ask if I can increase my volume. So let me see if I can do that here. I hope that this is more audible for people. So looking at major medical and surgical policies still, potential exclusions that one might see would include pre-existing conditions or conditions not covered under the mortality policy, procedures that are not done by a vet, alternative treatments, maintenance, and for any of these terms, clearly what's maintenance versus another type of procedure, it would be important to note if that's otherwise defined in the policy or to figure out what that means. Elective treatments, routine dental treatments, surgery from accident due to use other than the declared use, and then treatment for navicular syndrome, arthritis, or degenerative joint disease. Similarly, limits on insurance and payments may include, under a major medical and surgery policy, anything beyond what's considered necessary, reasonable, and customary vet fees, may include required deductibles or copays, have some treatments covered only up to a limited amount, limitations on costs for transport of the horse, farm calls, or hospitalization, time-limited coverage for one incident. For example, that a particular treatment for one incident may be covered from the date of the reported incident up until like the 121st day, for example, past the reporting. And for horses who are at a lower value coverage, they may have lower limits on emergency colic surgery endorsement, which again is one of the things that we're seeing with the colic reimbursement programs for the nutritional supplements as to something that they advertise. Another first party policy that one might see is loss of use, which is intended to insure against becoming totally and permanently unfit to perform a designated use for stemming from, for example, external accidental and violent injury, and then potentially illness or disease. This refers generally to a total loss of use, not just a reduced level of competition. And then not for breeding, pre-existing conditions, behavioral, cosmetic, chronic, or degenerative. So based off of these sorts of exclusions that are possible, there may be misconceptions about how either broad or narrow this coverage actually is. Might see coverage or some sort of payout for 60% of the value, and a salvage clause may be included, which would allow the insurance company to take the ownership and possession of the horse upon full payment as agreed under the policy. Other types of first party policies, you might see stallion first season infertility, which would be because of congenital causes, and is generally defined or could be defined as under 60% of fertility. However, in order to be in alignment with this policy, you may see that the selection of mares being bred is highly regulated by number and breeding history of the mares to go towards calculating the percentage of infertility. And then may also have a salvage clause here, again, which would potentially enable an insurer to take ownership of the stallion upon full payment of a claim, which in these sorts of situations as well with stallion breeding, you may see syndicates or multiple owners of a horse, in which case, if there's a payment of a claim for less than all shares of the stallion, the insurer may have the right to control the career of the stallion following the application of the salvage clause. Similarly, for stallion permanent disability, accident, sickness, and disease, you see some exclusions for certain conditions potentially, and also a salvage clause. And so I think here a takeaway is that stallion management and ownership may involve syndicate agreements in potentially more situations than one might see with a private horse owner, just for a recreational horse owner, which would require ensuring that the syndicate agreement lines up with breeding contracts, would line up with applicable insurance policies, et cetera. So there's a number of moving pieces and layers there to consider. Prospective foal or barrenness policies are another type of first party policy, which would be for insuring against when there's no live foal or a foal would sadly die before the end of the policy, potentially require veterinary visual proof of loss, and in the case of a mare who has a multiple pregnancy, would potentially void the policy, lead to a return of the premium. Third-party policies that we may see would be equine professional liability, personal horse owner liability, commercial equine liability, care, custody, and control, and as I mentioned earlier, camps, clubs, shows, and events. However, it's important to recognize and be careful in reading a policy that one policy very likely does not cover everything. For example, liability policies generally don't cover employer liability, workers' compensation, contractual liability, liquor liability, dishonest or criminal conduct, and higher risk equestrian activities like polo may be expressly excluded. Other considerations with third-party policies are that homeowners policies generally do not cover commercial equestrian activities. In those sorts of situations, likely best to ask and not assume or hope that there is coverage. So understanding who the insured is and who is covered is important, whether it's a business versus an individual property owner, and whether there's application to employees or other defined insureds. And whether or not this includes care, custody, and control of others' horses, generally not covered unless specifically purchased. So for example, thinking through those sorts of issues, is taking care of a friend's horse on one's own property for free or for very little a quote unquote commercial activity? And then what happens if that horse happens to injure a third party, particularly while it's on one's own property? Now I'd like to briefly go over two fairly recent equine insurance cases just to underscore some of the concepts that we've discussed so far. The first one is Deerdoff v. Farnsworth from Oregon in 2015. There was a commercial farm policy that was up for renewal. They had separately purchased care, custody, and control liability insurance previously, but then asked the agent to consolidate with their same insurer when it was up for renewal. They asked for care, custody, and control liability insurance. The insurance agent told the clients it was added, but care, custody, and control property insurance was actually added with an exclusion for the liability insurance. The insurer sent the policy to the insurance agent, but the clients did not receive the policy until after the loss. There was very sadly a trailer fire killing 6 horses who were owned by others. The mortality insurers of those 6 horses subrogated and sued the stable, which won on motions. The insurer declined to defend, so the stable sued the insurer and agent for cost of defense. The court ultimately found the insurer was not liable under the policy, but before the appellate decision issued, the insurer had settled with the insured. Another one that just came out in August of last year was Green Bank versus Great American Assurance Company out of the 7th Circuit. There was the plaintiff in 2017, specifically September, purchased an American saddlebred gelding named Thomas for $500,000. She intended to use Thomas as an athletic show horse for competitive purposes. And she had obtained a mortality insurance policy for full purchase price. And since we're discussing a mortality insurance policy, I'll just give a spoiler alert now that Thomas is alive and well, at least as of oral argument on this case. It was for coverage in event of death or authorized humane destruction, which must result in part from illness, injury, or specific surgery, and required immediate notice if ill, as we had been talking about previously. She also had a major medical endorsement and a guaranteed renewal endorsement. The policy specifically noted that failure to provide immediate notice of Thomas's illness would invalidate any claim under the policy. Also, if Thomas became ill, the policy allowed Great American to, with the plaintiff's permission, assume control over Thomas's treatment. Thomas was boarded at a training barn. A few months later, he developed colic and then pneumonia. Around February 2018. So over the next few months, he lost pretty significant weight, developed cellulitis in all 4 legs, had eye problems, pulled a muscle in his back leg that compromised his ability to get up and down, but plaintiff did not report pneumonia until late April 2018 to the insurer. The treating vet informed the insurance adjuster that Thomas probably needed to be euthanized. The insurance company then obtained its own vets who uncovered deep lung abscesses and severe laminitis, which can be life-threatening if severe. It occurs when the coffin bone that's in the middle of the hoof separates from the hoof capsule, which prevents blood flow to the tissues in the hoof. They advised that it wouldn't be unreasonable to make euthanasia recommendation, but they wanted to try treatment first. They performed a tenotomy, which is an incision in the deep flexor tendon to restore blood flow and relieve pressure on the coffin bone. The plaintiff wanted a more conservative treatment because tenotomy would destroy Thomas's future athleticism as a show horse. But the equine podiatrist said that this was his only chance of regaining any athletic ability. Within a year, he was back to bucking and galloping in pasture, and as I mentioned, still alive and well at oral argument. She submitted payment to renew the policy in September 2018, but the company refused to renew based on failure to meet conditions precedent, including providing immediate notice. Plaintiffs sued, including for unreasonably withholding authorization for humane destruction, which the Seventh Circuit rejected on the basis the company, under a mortality policy, was not required to protect Thomas's use as a show horse. It specifically stated to protect against Thomas's use as a show horse, Greenbank could have sought the loss of use policy, which we've previously discussed. So some takeaways to consider here is that insurance policy is a contract. Of course, important as with any contract we know is to read and understand, pay attention to the detail, avoid complacency, look at all the details, quote schedules, policies, and ask questions, especially to confirm and determining whether the desired goal is covered. And I know we're running up against the end of our time, but I think everyone, and please let me know if there are any questions.
Please feel free to unmute or type questions in the chat if you have it. Thank you so much, Amanda.
Oh, thank you, everyone.
That was great.
Well, hearing none, I will thank everyone and turn it back over to Alex. Thank you again.
Well done, Amanda.
Thank you so much. All right. I think that is everything then. So I hope you all have a wonderful weekend. And once again, Amanda, thank you so much for that really fantastic presentation. It will be added to our Animal Law Committee channel. So if anyone was not here today, they'll be able to watch it there as well. Okay. Thanks, everyone. Take care.